Mr. Bismarck Rewane, Managing Director, Financial Derivatives Company. Great to have you on the show, sir. So it's been 1 year since the Dangote Refinery came to operations. So far, how have you seen, 1 year, so far, the impact to the economy and the impact to our pockets?
Yeah, good morning, Larry, and thank you for having me. It's a milestone. This is 1 year since the Dangote Refinery started production. But I want to share some data. Also, it's important to note that the first 300,000 barrels of refined products has been shipped to the United States, making the Dangote Refinery not only a domestic and regional conglomerate, but also turning it into a multinational. You must also bear in mind that the Dangote group refinery actually went to a joint venture with Ethiopia. The Ethiopian government has 40% and the Dangote group has 60%. That makes it also a continental conglomerate, a global conglomerate, and also a regional champion. Now, having said that, what has happened in the last 12 months? In the last 12 months, Dangote Refinery has brought down the price of petroleum products 8 times and has increased it 3 times. This 8 times coincides actually with the rate of inflation. In this 12 months, the rate of inflation in Nigeria has actually declined only by 6 times and in the last 4 consecutive months. The last time the price of petrol was brought down in this country is as far back as 2009, when may so rest in peace, President Yar'Adua was in the office. It went down from 97 naira a liter to 87 naira a liter as a part of the stimulus package for Nigeria at that time. Ever since then, the price of petrol, and before then, the price of petrol has only increased as the exchange rate depreciated. Now, what has happened in the last 12 months? We've had 8 times a reduction, 3 times an increase. And what we must bear in mind fully is that in this 12 months, there have been 1 Salah celebration, 1 Christmas celebration, New Year, and Easter. Typically, those seasonal, those festivities always coincide with fuel queues, right, and distortions to the transportation network. But in the last 12 months, both at Christmas, both at New Year, at Salah, and Easter, and now tomorrow you have Eid al-Maulud, there have been no queues at all. So we must take that into consideration, that even though the price increased sharply at the beginning of the period, and that was before, that was due to deregulation, but because of the economies of scale, because of the efficiencies of the system, because of the Naira for crude swap, we've had these 8 reductions and only 3 increases. In this period, in these 12 months, the price of crude peaked at about $82 a barrel. And as you just said now, the price of the Brent futures is down to 67. So I think that it's quite commendable, and it shows the resilience of the Nigerian economy at this time, and more than anything else, the efficacy of a privately led investment that can actually transform the economy. And that is why there's a strong correlation between 1, the price of petrol coming down, and 2, the rate of headline inflation in the country.
Mr. Rewane, it's just 1 year at this point. What do you see after, say, 2 years, 3 years? Do you see, petrol prices coming down a bit more? I know we still have that Oliver twist in us. We want petrol prices even lower.
Well, Ladi, you're asking me to try and predict whether it's going to rain today or tomorrow.
Yes.
I can't do it. The point is that what is within our control is the cost of production and the refining capacity. What is outside our control is the price of Brent. And you know that OPEC is going to meet on September 7, and they are threatening to increase capacity, and that could bring the price of oil, global price of oil down. If that happens, then we have no choice, but the Nigerian petrol price will also come down. But at the same time, the federal revenue collected from petroleum profit tax, royalties, and will actually decline. So it's a double-edged sword. We like high oil prices for our revenue, but we like low oil prices for our petrol tank. So that's that's the situation. But also, I want to bring out the fact that, the promise was that in the month of September 1st, right, we would have uniform pricing due to the Dangote 4,000 CNG trucks taking petroleum products across the country. I think that has been moved forward by a month. The uniform pricing will kick in. And when that happens, you'll find that the differential in inflation rates between different parts of the country will kind of smoothen out. And that helps to lead to optimal allocation of economic resources in the country.
All right, Mr. Ron, another big issue right now, we see the shea nut prices in Nigeria have plunged by 33%, and that's on the back of government's decision to ban exports. Is this a good thing or a mixture of good and bad, at this point? What does this mean for the farmers and the women farmers that depend on, revenue from those shea nuts?
It's a mixed bag. What we have done is to ban the export so that it could bring down domestic prices. And domestic prices are actually declining. But the point is that what does Nigeria need more? Is it just the reduction in domestic price of shea nut, or an increase in output and export so that we can have more dollars? So for now, I think it's a temporary ban instituted by the president, and I think he will review it very soon once we have balance. Remember, there was a time when we closed our borders and said that, okay, because our borders were open, the terrorists were coming in, and the telco companies were asked to shut down all the base stations around the border. What did we see? We did not see any reduction in terrorism activity. We did not see any, smuggling continue. So there's a limit to which regulations and protectionist policies can help economies. But the most important driver of economic activity and growth is the efficiency of the producer. And the point is that the farmers are efficient. Even if you ban it from now to tomorrow, they will find a way of getting it out. But the reason why it's not going out is the currency has stabilized, and today the naira is trading at about 1537, which is one of the most appreciated point in the last 3-4 months. So you find that the naira has appreciated against the dollar about 3.5%, but the dollar has actually depreciated against other currencies by about 2%. So net, you'll find that the naira is stable in terms of its misalignment from the currency official value. But what we saw in the last 2 days was that the official rate appreciated more than the prior rate, and the gap, which was narrow, which was about 8 naira between $1, has now expanded to 15 naira in a dollar. So I think that there's some activities going on there, which should normally bring the naira into equilibrium. We think that the naira will depreciate in the next 2-3 days, but not much, just marginally, and we trade between the 1530 and 1560 over the next 30 days.
All right. Thank you so much, Mr. Bismarck Rewane, and definitely enjoy the holidays that start tomorrow.
I didn't get that.
I said enjoy the holidays tomorrow. We have a public holiday, and I'm wondering how you're going to spend it, but I'm sure you're going to enjoy it tomorrow.
No, nothing sure that I'm not going to buy peanut butter, but I'm going to be just chilling out to enjoy myself.
Exactly.
Thank you very much.
I want to be like you when I grew up. Thank you so much, Mr. Rewane, for coming on today.
Thank you for having me.